Hi, everybody. We're going to go ahead and get started. Thanks for coming. I'm Jen Grayson. I'm the CEO for Nereal, which is a predictive AI being built on the blockchain. And we're doing our token sale in a couple months, but we wanted to, instead of just doing a traditional kickoff, we wanted to really create an evening that would add a lot of value to what's going on in the space. And so we brought a couple speakers in tonight. We're going to have them all get up and speak, and then we'll have a panel afterward. First, we're going to have Jason Hall, and he is speaking on behalf of our sponsor tonight, which is Day Trade My Money. And he's going to talk about some indicators that they have that are working with Bitcoin. And then we're going to have James Leba come up and talk about, he has a crash course on cryptocurrency. Everybody here tonight is kind of from the educational space, and so that's really what we wanted to be able to focus on tonight. Chad Bennett is from Heroic, and they are launching an ICO coming up soon. So he's going to talk a little bit about that, and then Brian Sewell will finish up the evening. He's an educator. He's also one of our advisors for Nereal. So he will kind of get some questions from you guys, and then we're going to have a panel with everybody up here that will be able to answer any questions that have come up for the evening. And then we'll all be around for the remainder of the night if you guys have any questions. So we'll go ahead and get started. Thanks for coming.
Any traders here? Investors? Anyone with a 401k? Yeah. You're an investor. You want to place a trade? Yeah. Okay, let's place a trade. You got butterflies in your stomach yet? This is Bitcoin. This is my broker's version of display on Bitcoin. What should we do? Should we buy or sell? Raise of hands if you think we should buy. Raise your hand if you think we should sell right now. Everyone wants to buy? Okay, you made the decision for us. There we go. Boom, we're in a trade. Just like that. Now what? Now what do we do? Hold on to it? Watch and wait? How do we determine where to take profit on this? Or do we just hold on to it and let it run? Individual philosophy. What happens if this goes against us? What do we do then? What's it possible? Anything's possible in the world of trading. Yeah, what I do, I've been trading since 2007. I started trading silver stocks, and that's what I do for a living now. I trade and I teach people. I teach everyday people how to trade, and we have a system that we've developed, strategies and tools that help them have great success. But my specialty comes in the Forex market, and that's where we've experienced our success. Last year, I had several of my students and several of my traders come to me and say, hey, what about Bitcoin? Can we trade that? I didn't know anything about Bitcoin. And I was like, no, that sounds like a Ponzi scheme. So I kept getting people asking and asking and asking. And so finally I said, fine, I'm going to take a look at it. And I started to trade Bitcoin from a trader's and an investor's perspective. So what I'm going to do tonight, I'm going to talk a little bit about the model that we use and the program that we use to help our traders trade. And I'm going to take that model and I'm going to show you how it translates into trading cryptocurrencies, in this case Bitcoin, and also show you how in some ways it's a little difficult, a little tricky to have that translate straight across. You interested? Yes. Okay. Let's go back to my sweet PowerPoint. Okay, again, I asked the question, how many investors do we have versus how many traders do we have? Is there a difference between the two? What's the difference? The time frame? As an investor, how long could you hold on to something? Years. Until you're rich? Years, maybe. As a trader, how long can you hold on to something? Until you make a profit? Minutes? Hours? Days? At what point is that threshold? It's a little bit of a blurred line. I consider myself to be a trader with an investor's mindset. I like to look at things long term. I also like to be able to have the ability, if I prefer to be in and out of a market. If I don't want to be exposed to volatility and risk, I can pull myself right out. And I don't care if a market's going up or if it's going down. I'll make money either way. I just want to be able to ask and answer the question, can that thing be traded? That's what I want to know. So as an investor or as a trader, you have two jobs. Anyone know what they are? What's your first primary job? Make money. I hear that all the time. That is not your first job. That is your first job. And it doesn't matter if you're a trader or an investor. Your first job is capital preservation, risk management. The money I put into that account, I want to make sure it doesn't disappear overnight, right? That's your number one job. Your secondary job is to grow it. In that order. One of the things that trips up a lot of amateur traders that I find that I work with is they get these two roles mixed up. They take growth first and capital preservation second, and then they wonder where their account went, okay? So as long as anything can help me meet these criteria, I can preserve it, I can manage the risk involved in that, whatever I'm trading or investing in. And then I can reasonably grow it at a rate that I feel comfortable with, I'm interested. And that's when Bitcoin caught my interest. So what I want to do first is I want to explain what we do as a company, as a trade group, and just really simply outline the model that we have, that we give our traders and our students. And I'm going to show you how it translates into Bitcoin and how it kind of doesn't, and show you some nuances, all right? And I got to be super careful in this kind of a group because I can quickly go into coaching mode and start reeling off terms that are going to go right over your head. So I've got to pump the brakes a little bit with what I'm doing here, but I want to make this as valuable for everyone that's involved here as I possibly can. So let me try to be a little technical while also kind of holding back a little bit. And after the presentation here, if you got questions for me, I'm happy to go as deep as you want to go with the answers. Our Forex model. First, we have tools. We've developed proprietary tools and other strategies that help our students have a high level of success. It helps us understand from a technical standpoint how the market works, helps us to anticipate the market very well, and gets with a high level of accuracy on our trades. We also do fundamental analysis. Those are two key parts of analysis, understanding fundamental analysis and technical analysis. And we have tools to help our students do that. And I'll talk more about these two in a moment. Second, I'm going to work with you as a student to help you get to a spot where you have a strategy that fits your risk tolerances, that fits your style, your preferences, what time of day you can trade. It doesn't matter if it's nighttime or morning time. With Forex especially, you can trade whenever you want to. And the broker I have with Bitcoin, I can trade whenever I want to on that Bitcoin. So it makes it nice. But whatever your schedule is, I've taught college students with really strict schedules and really loose risk tolerances. I've taught retired people who have a little bit of money that they want to get aggressive with because they don't quite have enough to retire with, and they want a strategy that can help them manage it themselves. But with anyone I teach, I need you to get to a spot where 80% of the time you're taking profit as you generally expected to on your strategy. If I can get you to that, we can take it live. And the rest of the time, we, for that, those rare occasions when the market doesn't do what you thought it would do, right? I come up with a system of recovery for my students. What do you do if a trade goes against you? How do you manage that? How do you manage your risk? I'll work with my students and traders to help them recover a lot of those losses and even break even on a lot of those things that go against them. And if you can do that, if you can get an 80% level of success on your trades and then break even on a lot of the stuff that might go against you, you got a successful strategy on your hands. So this is the model. The question I had put in front of me, the mystery was, can I take this that I do with Forex and translate that into trading crypto, and specifically Bitcoin, because that's really all that was available to me at the time. Let's do the comparison. You ready? First, technical analysis and indicators. We have proprietary indicators that we utilize. We teach technical analysis to our students. And in my experience, depending on the time frames that you're using and the strategies you're employing, the technical analysis and indicators translate very well. When you start getting into the smaller moves and the micro scalps, as I like to call it, it gets a little tricky. But if you're from an investor standpoint, if you're looking at longer term moves, the indicators do a very good job of showing you good opportunities to get in. So this part was a breeze. We had a lot of volatility in December on Bitcoin, just incredible skyrocket up, and then the volatility coming back down on the retracement and other issues. During those high volatility times, our indicators still operated very well on various time frames. So that part passed the test. Here's where the waters got a little choppy. Here's the deal with Forex, with fundamental analysis. I know what the fundamental underlying forces are behind a currency pair. I can take, in Forex, this is what we do. For those of you who's never traded Forex before, doesn't know anything about the Forex market. Okay, so this will be new to you. I'll educate you a little bit. In Forex, what we do is we take two different currencies. So we might take the euro, we might take the USD, the US dollar. We'll put those together and we'll pair them up in what we call a currency pair, and it creates a market, and we trade that. It's almost like an MMA match. We put them together and they kind of battle it out for which one's more valuable than the other, right? Now, I can look at one currency, I can look at this country over here, and I can say, okay, well, their economy is doing pretty good. They've got good employment, good GDP, inflation's going up, and their central banks are raising interest rates. That generally makes the currency go up in value. And I can look at this country over here and say, these guys have an economy that's in the toilet, and they have poor employment, their central bank is dovish, any number of things, their currency is going down in value. Well, I can put those things together, I can trade that. I can trade in that direction and be profitable, whether I'm going up or going down with a pair. What are the fundamentals behind Bitcoin besides hysteria? I've looked into a lot of this, and I've thought about a couple of things that interest me, and I'm sure today you're going to hear from people much smarter than I am about the fundamentals behind crypto that can tell you some more nuanced things. But when you look at cryptocurrency, you've got a libertarian and a millennial push behind it for sure, don't you? Libertarians love it. Why? Decentralized. The government can't inflate this thing. They can't touch it. They can't track it. They love that, libertarians, right? How many libertarians do we have? Yeah, okay, good job, good show. Millennials love this stuff. I mean, good luck pulling cryptocurrencies away from the millennial generation. This is something they love, okay? So you take that and you pair it with the evil word regulation, which is a word libertarians hate, right? Regulation, though, can be like a double-edged sword. If you have government coming in and starting to, in whatever way they possibly can, and I don't know what forms that's going to take, start to regulate crypto, like Bitcoin, well, it's going to tick off some of the libertarians and some of the millennials a little bit, isn't it? Might take the shine off of it for them. But what's it going to do for people that are sitting on the sidelines, waiting for an investment or something that's a little more safe? They're holding on to their money, waiting for the green light. They might even come in at that point and actually boost it back up. So you might have a double-edged sword there with regulation going either way. What about adoption? Adoption. In early 2017, the first half of 2017, there was an 11% increase in the amount of brick and mortar stores that were accepting Bitcoin wallet. What's going to happen to crypto, not just Bitcoin, but crypto in general, when places like Amazon, Walmart, and folks like that start to accept your Bitcoin wallet or other crypto? That certainly is a fundamental player behind this. The difficulty with some of these fundamental things I'm talking about is there's no news release, there's no predetermined economic release. In Forex, I know when they're going to release GDP. I know when the central bank is going to raise interest rates or lower interest rates. They tell me, they give me dates for things like that. There are no dates for Bitcoin. You're going to wake up and there's going to be news, and it's going to happen almost on an hourly basis. So that's one tricky part as far as trading this. You can still navigate this with trading crypto. Just stay small, right? Watch your volume, watch your lot sizes, how much money you're putting in, and be sure you book your profit every once in a while on a move. Even if you are an investor, it's okay to book profit every once in a while. Strategies. These translated very well. Strategies not just for day-to-day trades and entering into positions, but also strategies for recovery, what we're doing if something goes against us. They translated very well. They're very seamless, actually. The only thing I would say with system of recovery, I would asterisk that, is to say it's going to take some skill and it's going to take some strict rules. People ask me all the time, my students will ask me, especially when they start the program, how long is it going to take me to do this? What's the level of success? And my answer is always the same. What do you think makes a successful trader? I'm asking you. Resilience? Consistency? There you go. Thank you. If you want to be successful in trading or investing, you make good rules and you follow them. What happens with a lot of amateur investors is they get impatient. They take risks. For some reason, the trading world attracts a lot of degenerate gamblers. I'm not sure why that is. But if you can keep rules, you can be successful in trading. We give you the rules to keep. If you follow them and they fall in line with your strategy, you can be successful at trading crypto. I'm going to say one thing here as I wrap up my time. I was watching a BBC broadcast. This is on YouTube, so it was recorded. But they had a day trader on there, and the interviewer was talking about the horrific economy that they were having. They had bad GDP numbers or something. And she said to this is a day trader now. This isn't some stuffed suit. This is a trader like me. They asked him, said, how are traders taking this horrible news? And he said, to be honest, I don't really care. I don't care if the market's going up or if it's going down. I'm going to make money either way. And as a trader, I understand that. She was shocked when she got that answer to that question. Because isn't that our general philosophy? Like if you invest in the stock market, you expect it to go up over time and continue to go. That's where your 401k is, right? What I help people understand is you have the ability to take control. You decide whether you want to be in the market or not. And if you don't like the risk involved in an asset that you're trading, temporarily, pull yourself out of it. And when you like it, it's risk on, you can get back in. But what we help people do is take ownership of their own finance. No one's more interested in the progress of your money than you are, right? And I'm not asking people to sit in front of a monitor for 16 hours a day in their pajamas drinking hot cocoa and trading. I think that's what a lot of people think day traders are. They take super glue and put it in their eyeballs and shove them on their screen and just sit there and watch candlesticks all day. I trade for a few minutes in the morning and a few minutes at night, and I'm done. I set my parameters for my trades and I walk away, and I have control. I have control. You're here to talk about crypto, not just Bitcoin, but crypto in general. And I really honestly think we are on the precipice of something incredibly huge. And if you make yourself smart money, and that's what we help people do, we help make them smart money, smart investors and smart traders, you can take advantage of it. Thank you for your time.
All right, can you hear me okay? Awesome. Why don't you guys stand up real quick and stretch out, because cryptocurrency is a very technical subject, and too much exposure can blow your mind. So why don't you stretch out your arms a little bit. I'll pull up the presentation here, and then we'll get started. We'll start with a couple jokes real quick. Does anybody know the type of vehicle that a Bitcoin investor will not buy? A Fiat. All right. Does anybody know why the Bitcoin investor got in trouble with the police? Because he touched a Bitcoin miner. All right, we'll stop right there. All right. My name is James Leba. I'm one of the founders of Blockchain Lead. Today we're going to talk about how we accelerate your education with the blockchain. A little bit of background about myself. I'm one of the founders of Blockchain Lead. We started a crypto crash course last year, which is an all-day workshop, a live workshop where we teach people how to invest in digital assets, how to trade them, and how to secure them with a Ledger Nano S hardware wallet. It's been incredibly popular and it's growing, so we're doing that every single month. I also organize the Bitcoin and blockchain meetup. And so for those of you who are just new to the cryptocurrency space, it's a free event every single month. We have a 1-hour presentation where we talk about blockchain or Bitcoin or cryptocurrency. And so definitely everyone should always be going to that. One of the Bitcoin meetups is sponsoring today's event. And so it's just a great way to be able to get free education as well. A little background before I started investing into Bitcoin, which was in 2014. I used to work for Goldman Sachs. Goldman Sachs. It's a great bank. I used to work there for 7 years. I've been in the financial services industry for about 12 plus years. And so translating well into the cryptocurrency space was a natural transition for me because I already knew how the plumbing worked on the back end. Now, before we get into today's presentation, I want to get a general sense of who's in the audience today. And just out of curiosity, who in the room bought Bitcoin for the first time in 2018? Nobody? So did anybody buy Bitcoin? And nobody would have admitted it anyway, probably. But did anyone buy Bitcoin in 2017 for the first time? All right, so we got about a third. Anybody buy Bitcoin for the first time in 2016? Okay, we got a couple. And then who bought Bitcoin in 2015? Okay, what price did you get, if you don't mind me asking?
I got somewhere
$2? Oh, $200? Okay.
I may have been early 16 if I'm wrong.
Okay.
I got some.
I bought Bitcoin in 2014 for $250, and that's right when Mt. Gox happened, and so it just went smashing down, and I hodled, and that's really how I invest. I don't try to day trade. I don't try to time the market. Today I'll talk to you about some of the Bitcoin tips and tricks that I've learned along the way that I think will be useful for you. But I don't try to time the market, and we're going to get into that. So for starters, tell you a little bit about where we came from in 2017. I'm going to go over the 5 rules for investing in digital assets. I'm also going to talk about the top 5 scams that you're going to encounter in the cryptocurrency space, as well as the top mistakes that newbies tend to make. And then I'm going to be very generous and tell you guys a little bit about, if you're just getting started with investing in Bitcoin, what your portfolio should actually look like. And so let's get started with that. So I really like this 2017 performance chart that was published based off of data from CoinMarketCap. And so if you look at the very top, Ripple, 36,018%. So if you would have invested $100 into Ripple on January 1st, you would have $3.6 million. That is ridiculous. Does anybody in the room actually own any Ripple? Oh, wow. Well, hopefully I'll convince you to sell it. Does anybody know what Ripple actually does? Do you mind kind of giving me a shot?
Yeah, with the X-Rapid service is international bank transfers and settlements.
Yep. So Ripple facilitates banking transactions, essentially, and Ripple is facilitating bank transactions on a testnet server within the banking system. So what that means is that Ripple is actually not even being used in production right now. It's in a testnet environment. And on top of that, Ripple is actually supposed to be used as a voluntary feature by the banks to prevent spam. So this is actually what happens when you actually read the white paper and you realize you're actually investing in a token that is to prevent spam for the banks. Now, Ripple also owns 50% of all of the token supply of Ripple. And so recently, Ripple, people started buying it up because it was only 50 cents. It was only 75 cents. It was only $1. And so they bought it up as high as $3 at its peak. Maybe a little bit higher than that, probably maybe $3.20. And so they kept on buying Ripple, and Ripple actually ended up being one of the top best performing companies in the world. Yet, they have no product. They're in a test net situation. Also, one of the founders of Ripple was as rich as Mark Zuckerberg, because people saw that they could buy a Ripple token for $1, and they said, oh, well, Bitcoin's, $10,000. Oh, that's too much money. I'm just going to buy a bunch of Ripple instead, and it'll go higher, and it'll go to $2 and $3, but they didn't pay attention to the market cap. And so Ripple went up as high as $3 plus, and then it came crashing down to $1.25. And the reason why is because it's not even really a decentralized blockchain. There are actually only 5 servers that are actually validating your transactions across the world when you want to move Ripple from one server to the next. So that's actually as centralized as you go, and it was one of the best performing cryptocurrencies from last year. So there's a whole lot of speculation going on, and a lot of people are throwing money at these things, and they don't necessarily know what they're investing in. And then, of course, Bitcoin, 1,318%. I think that's a pretty good ROI. My 401k last year was 20%. So 20% versus Bitcoin's 1,318%. I think that's a pretty good return, right? I think a lot of people are trying to time the next cryptocurrency. They want to get into that next Bitcoin, at below $1, and then have it go up to $10,000. And it's important for people to do research into actually what they're investing in. So that way you don't get into a situation where you all of a sudden make the founder of Ripple, as wealthy as Mark Zuckerberg when he doesn't even have a product. And so this is the important part about doing your research and investing in digital assets. So we're going to get into the research a little bit more, but I thought this was a really good chart that showed the performance from 2017, because a lot of these returns are huge. I mean, anybody with just a little amount of money in the cryptocurrency space made a lot of money last year. And now you're getting into the year of 2018, and people are expecting the same return, but now you also have the attention of a lot of different regulators as well as a lot of hackers and spammers. And so you got to be a little careful and a little bit aware of where we came from. Now, in the Crypto Crash course, we teach people 5 rules before they start investing in digital assets. And this is something that has served me very well. And it's number 1 is that time in the market is a lot better than timing the market. Now, people who day trade or position trade will disagree with me on that, but I'm also aware that I'm a very bad trader. I like to buy when it's high, and then I like to sell when it's low. I just cannot time it. I have better things to do with my time than to sit there and watch CoinMarketCap every single day. And so what I do is I invest in the digital assets that I find have the most potential. They have people that I believe in, and I keep my digital assets there, and I'm holding on to them for years. I'm not selling whether or not the market goes up or it goes down. The market history shows that the market goes up and it goes down. It's volatile. But I'm bullish on the technology itself, and I want to invest into these Apple stocks when they're pennies. Number 2, verify 3 times and send once. There is no undo in crypto. So for those of you who are brand new to the space, if you have yourself a bank and they're doing wires or ACH transactions, you're using PayPal or Venmo, you can reverse those transactions if you make a mistake. Even in the banking space, you can actually reverse your transactions. Within the digital asset space, you cannot reverse your transactions. So as a good rule of thumb, we always like to tell people, verify your landing space. Where are you actually going to be sending your cryptocurrency? Verify it 3 times, send once. And as a tip, you can always send a small test transaction first, maybe $5, $10. Move it over, make sure it landed where you wanted it to land, and then send over the bulk of your assets. Number 3, if you don't have your private keys or seed words, it's not your crypto. Ask people who had their assets held at Mt. Gox or MT Gox, which we like to call it in the crypto space because it didn't have any Bitcoin in it. It was just an online banking platform that said that you own Bitcoin when in reality you didn't. The assets that you have right now at Coinbase, if you have Bitcoin or Ethereum being held there, that's Coinbase telling you that you have a balance, but in reality they're the custodians of your Bitcoin, and it's because they have your seed words. Now, if, say the CEO decides to make a bad decision, which CEOs would never do, but say that a CEO decides to do something stupid, well, they could collapse that institution, and then you would have a hard time getting a hold of your Bitcoin. What happens if you have a good intentioned regulator coming in and they're wanting to actually regulate with the best intentions? All of your assets are being held at a third party, and you're going to be stuck having to follow whatever regulation they want. What happens if there's a hacker, right? Bad intentioned hacker DDoSing your cryptocurrency exchange so that way that you can't pull out your crypto when you need it the most. Well, you're relying on a third party to protect and custody your assets. So one of the things that we teach people in the Crypto Crash course is one of these things. It's a hardware wallet, a Ledger Nano S. We give them out for free during the Crypto Crash course, but this is pretty much what we build the entire course around, is teaching people how to use a hardware wallet. Because if you don't control your seed words like you could on a hardware wallet, it's not your cryptocurrency. And number 4, never invest more than you can afford to lose. And this is a famous one that a lot of people still don't understand, myself included, and that if you feel too uncomfortable with how much money you have exposed to the cryptocurrency marketplace, then you have too much money in the cryptocurrency marketplace. I've seen different percentages on CNBC of anywhere between 1 to 5%, maybe 1 to 10% of your entire net worth should be invested into digital assets or cryptocurrency. So that way, in case something happens with the market and it collapses, it's not your entire portfolio. So I've seen percentages like that. I think that's a good rule of thumb. But you have to really ask yourself, are you comfortable losing every single Bitcoin or cryptocurrency that you have invested? And if you're comfortable with that, then that's the right amount. But if you're uncomfortable with it, then you have too much and you need to pull it back. And then number 5 for investing in digital assets, do your own research. And this includes not listening to the people on YouTube. It includes not listening to people on Facebook. It even includes not listening to people like me tell you what you should invest in. Nobody can actually tell you what you should be buying unless you do your own research. And so what we'll do is we'll give you some guidance. We're going to help you help yourself, but ultimately you're responsible for doing your own research, and then we can help provide guidance along the way. Now, for those in the back, you might have a hard time seeing this, but here is the top 5 mistakes that newbies make when investing in cryptocurrency. Number 1, not doing your homework. There are a lot of people on YouTube who are promoting their favorite ICO as the next best thing. John McAfee actually has a 20% bounty for any ICO. He'll send out one tweet if you let him have 20% of your coins. So he's for pay pretty much. He's a for-hire tweeter with a big following. Is that somebody you necessarily want to trust, who takes a 20% bounty off of the coins that he's pumping? Be careful about YouTube. Number 2, burning your coins. You can copy and paste rather than using the QR codes can lead to disaster. This goes again where you check 3 times, send once, know where you're sending your money. So know your landing spot before you send it. Otherwise, if you send it to a wrong QR code or address, you could lose it forever and you'll never get it back. Number 3, being impatient or the fear of missing out. This is also known as FOMO, which is a cryptocurrency slang for basically people who get super excited when they see the price of something going up. I know recently we just finished a 6-month huge bull run in the Bitcoin marketplace. Everything was up and everybody was happy, everybody was making money. And I was sitting there with my team and we were just researching some coins, and we saw that IOTA had come out with a Microsoft partnership, and we saw the price was up 60%. And we thought to ourselves, like, oh man, this is it. We got to get in now. It's 60%. It's going to go to 100. And we had to talk each other actually out of not putting in the buy order. And we would have bought at $3.50, but instead we decided to hold off, and it ended up crashing down to $2. And then number 4, not having a hardware wallet. Okay? Hackers can steal your coins in a lot of different ways. They can, they can take over your email addresses. They can take over your text messages. If you leave them on the exchanges, that makes you vulnerable. I know that one of the famous hacks that I had seen was at Bittrex. Bittrex does not have customer support or customer service, but somebody had posted a customer support phone number on Google, so that way you could call them and ask them for help with your Bittrex account. Well, it ended up being just some scammer that was just taking phone calls and then taking people's Bitcoin or crypto, and it was ripping off people that way. I've also just keep your money on a hardware wallet. And number 5, losing your passwords or seed words. So write them down and keep them 2 copies in safe places. So we were helping somebody who had taken their 24 seed words that you get with a Nano, Ledger Nano S, and he had one in his notebook, and then he had one on the side of his desk. All right, so he had one in his notebook, and then he had one on the side of his desk. His house burned down. All right, so he lost both seed words. So be safe, take it, give one version to your lawyer, give it to your family, put it in a safety deposit box, always keep some with you, but put it in 2 separate places. Now, there's a few scams out there that I want to make sure that people are aware of. And these are things that, this is the Wild West, and there is no regulation. There is no sheriffs in this town right now. And so when new money comes into the marketplace, you're a target. One of the newest, or one of the scams that was around pretty big last year was copycat coins. And what this is where they essentially just copy another code from an open source project, and they make their own coin. Sometimes they'll even name it something similar. To show you how easy it is to copy any cryptocurrency coin out there, we actually created our own coin for the Crypto Crash course. So it's like a Ethereum token. It took us an hour and a half to make that coin. To make an ERC20 token, it took us an hour and a half to copy another code. People are copying these codes and raising millions of dollars. And so just be aware that it's not that hard to create a new digital asset and then promote it for millions of dollars. Bait and switch QR codes. If you're participating in ICOs, you're going to be looking at the forums, you're going to be looking at Twitter, and what's going to happen is they're going to want to reroute where your money is actually being sent. So instead of participating and contributing capital to the ICO you want to invest in, they're actually going to have a different QR code or a different address saying, oh, the website's down, send your money here instead. So unless it's an authorized, representative from the website, which you should be doing your research about, and you should know who they are, telling you where to send your cryptocurrency or digital assets, don't believe the Twitters, the YouTubes, the forums where they want you to send your money. And a lot of people lose money that way. Number 3, and this is a hot button for a lot of people, but cloud mining. Cloud mining, think of cloud mining equals Ponzi scheme. All right? If you don't have the hardware, you don't have the power, then it's a Ponzi scheme. Now, there are a lot of really well-intentioned miners out there who are just looking for investor capital so that they can purchase the hardware and that they can mine Bitcoin, Ethereum, Zcash, and they'll do it all for you, and then they'll pay you a profit from the mining. Now, that's all great and well, but that's easy. You can easily turn that into a Ponzi scheme because all of a sudden you have new investor capital coming in, you're promising out a return on the Bitcoin, and before you know it, you're having ASIC chips burn out, and then you're having to kind of replace equipment. You have more investor capital coming in, and you start taking that investor capital and start paying out the Bitcoin miners. And so be careful of cloud mining. Number 4, multi-level marketing Ponzi's. I'm just going to list them out here for the sake of time, but OneCoin, stay away from. BitConnect, they went under a couple weeks ago, but stay away from them if they pop up. Bitfinex and Tethercoin, I know we were talking about them a little while ago. They're a US dollar-backed cryptocurrency that is essentially just printing money. They kind of remind me of the federal government, but stay away from them. USI Tech as well. Cash grab ICOs. Fancy website, empty promises, no clear roadmap, or they're very vague with what they're offering. They have no established team or proven business model. ICOs are a very dangerous space for people who are getting started with cryptocurrency. And so I would just give you a recommendation just to stay away from them. Rather, I'll tell you what a beginner wallet should look like. And again, this is just something you should do your own research on, but just a place to get started. Here I have Bitcoin, Bitcoin Cash, Dash, Ethereum, and Salt. Now I can get into all of these, if I had more time, but why don't you do some research on these particular coins? And you're going to find that they have a developer base which is established and has been working on the project for a long time. Or you're going to see that there's somebody behind the particular project that's really impressive within the cryptocurrency space. Probably one of your better investments that you're going to be looking at, well, all of them are really great, but if you invest in people, which a lot of these projects have really great people behind, and you hold on to those for the long term, you should be okay. And then finally, if you want to do some more research, bitcointalk.org is probably one of the better resources that you guys can actually go to if you want to get independent information, talk to other people about what's happening in the space. They have a lot of threads on a lot of different topics. You could spend days and weeks in Bitcoin Talk, but a lot of the information that you're going to get there is independent, and a lot of the information that you're going to get there is information that's accurate. So I would trust Bitcoin Talk than I would Facebook or anything else. Now, this is just giving people started. This is I can make this presentation available for people, but cryptocurrencies and investing in digital assets is a journey. It takes a lot of time to be comfortable with it. Our particular program is helping you help yourself. We're there to answer questions for you. And so one of the best places to start if you're just getting started is our Crypto Crash course. I'll have the websites at the end, but we're going to be having another live event on February 17th. Usually we have anywhere between about 20 to 30 students come, along with a lot of helpers. We give you a Ledger Nano S hardware wallet. And so if you haven't purchased a Ledger Nano S hardware wallet, these are sort of like gold right now because they ran out. But we have them secured, and we're going to give them to you in the course. We have you bring your laptop and your smartphone. We hook it up, and then we show you how to move cryptocurrency around. So this is probably one of your best options if you want to just get in and out in one day and learn how to invest in digital assets, how to transfer it and trade it, and how to secure your coins. And as soon as you're done with the Crypto Crash course, we have research available for you, as well as give you access to a private Facebook group. So that way, if you do have more questions and you need help, you can always ask us. I'm the community manager for the private Facebook group, and so this is as close as you're going to get to customer support within a cryptocurrency space. And we provide monthly research, which talks about where we think the cryptocurrency space is going and what it's going to look like. And for those of you who want to take a picture of this, you can opt in to receive some more information at blockchainlead.com. If you guys actually sign up today or tomorrow, what I'll do is I can send you an email and I'll give you guys 30 free days to the private Facebook group and to all of our old Hodler newsletters, just for coming here today and taking the initiative to learn about blockchain. So I'll be here available afterwards if you guys have any particular questions, but appreciate your time. Thanks a lot, guys.
All right, is this on? Perfect. How's everybody doing? It's going to take me a second to get this connected. Hopefully it'll pop up quickly, but I doubt it. It'll get there? Okay. Let's do PC screen only. F5. Do you want to? I see it here. Okay. Perfect. All righty. That was awesome, James. That was really good stuff. In fact, if you're just getting into it, that is really great advice. My name is Chad Bennett, and I am the CEO of Heroic.com. Let's see if I can attach this somewhere. There we go. I am the CEO of Heroic.com. Just a little background about me. My first three loves in life, number one was sports, number two was girls, and number three was technology. I can remember when I was in grade school and we just got computers, and I fell in love. It was amazing. And fast forward 14 years later, I started writing code. Actually, fast forward when I was 14, I started writing code. Does anybody, by a raise of hands, remember Prodigy? Internet service. My dad that was our first internet service that we got, and it was amazing. I fell in love again with technology. And that first month, at that time, you paid for minutes. You didn't pay for unlimited internet. It was just, I think we got 120 minutes, and within 2 days, I probably used all the minutes. And my dad came back the next month and said, "Hey, I just got this big bill. If you do this again, I'm getting rid of Prodigy." And I've never taken crack before, but I can imagine what it feels like, because that was the internet for me. And I started writing code, and the first program I wrote was actually to get free Prodigy. So in addition to writing code, I became a little teenage hacker and was trying to figure out problems online. Fast forward a bit, I ran one of the largest cybersecurity departments at BYU and managed the mechanical engineering department at BYU, and decided to go on my own. There's a big 8 years that I won't talk about in there. Good stuff, bad stuff. Everybody knows 2007 what happened, 2008 what happened, but now we'll get to Heroic. Heroic is the future of cybersecurity powered by the blockchain and artificial intelligence. There are a couple problems today in cybersecurity. Number one is threats are growing at an exponential rate. Our lives rely on technology. We use it to do our jobs, entertain ourselves, and stay connected. but that technology is vulnerable to attacks. And we're seeing this on almost a daily basis with the news. All these large hacks being publicized, Equifax, Yahoo, Uber. These are companies with billions of dollars, and they can't even get it right. Second thing is, we hear about these hacks and we seem to brush them off. This Equifax hack, really one of the most damaging hacks ever, and it took us a couple days to forget about it and brush it off. What happens in the near future when we put our kids in self-driving cars and expect them to get to the location that we sent them to? What happens when we willingly put new technology into our bodies? How are we protected against that? In fact, just about 6 months ago, one of the largest heart pump manufacturers recalled over 500,000 heart pumps because the heart pump was remotely hackable and could kill the people if it was hacked. It's clear something more is needed. Current solutions are insufficient to catch up with the problems. By 2020, there'll be 3 million unfulfilled cybersecurity jobs that are open. Like I said, it's clear something more is needed, something heroic. At heroic.com, we are building a decentralized cybersecurity platform powered by artificial intelligence and a new cryptocurrency called the Hero. There's a couple pieces to this. We call it the heroic.com ecosystem. The first piece is an open cyber threat intelligence platform. Artificial intelligence. We believe artificial intelligence is what will bridge that gap. We know we can't do it with people, but we can do it with artificial intelligence. Now, the problem with artificial intelligence is it requires data. Lots and lots of data. And that data today is very hard to come by, specifically in cybersecurity. That data is hoarded by big business, by government, and large cybersecurity firms. And so for a company like us, it'd be difficult to build our AI without access to this data. And so we're building an open cyber threat intelligence platform to provide not only us, but the entire world access to this data. The second piece is a unified cybersecurity platform called Guardian. We've already built this. Heroic.com, we're almost 3 years old, and we were spun off from another company that's 8 years old. We've already built this platform, and later on I'll tell you more about our progress with that. But it's a unified platform to manage all the pieces of what we call the cybersecurity puzzle. Most people think antivirus is cybersecurity, and the reality is it's only one very small piece to that. This brings all those pieces together. And the third piece is a research and development platform to allow developers to get access to this data and build their own artificial intelligence solutions. This is a representation of how it works, and I'll apologize. I only started putting this together about an hour and a half ago. We confirmed that I would be speaking about an hour and a half ago, so I wanted to put as many things in there. But this somewhat describes how the system works. There's really three important pieces to it. There's individuals, you and I, and the benefit that you get out of it is AI-based threat protection. As you install software onto your computer, and as that software sees threats, it'll anonymize the data, send it back out to our cloud, and pay you in our Hero token. The second one are organizations. Organizations need data to build their AI models on. And so they pay with our Hero token for that data. They get access to this open threat intelligence platform with that data. And the third one is individual developers. Like I said, we'll provide developers the resources they need to build their own AI. Our mission is to intelligently protect the world's information. We know that we cannot do it alone. It would be impossible. This provides access to the world to allow any person to build their own AI on top of it, specifically with cybersecurity. 3 benefits. Number 1, open AI-powered threat protection. Number 2, threat compensation. And number 3, help protect the world. As more people get onto our system and our network, it will provide more access to data, which then will be able to protect people better. Like I said, I didn't have a lot of time. This is not our team right here, but we've compiled a group of all-stars. Our COO came from Dell. He was at Dell for quite a period of time. Before that, he was at Motorola. We have people that came from the Department of Defense. In fact, one of our advisors on our advisory board, we have Stefan Tall, one of the founding members of Ethereum. He was the first CCO. We also have some great advisors from the industry. John McClurg, he is at Cylance now, which is the leading AI-based cybersecurity company. He was a CISO at Dell, Chief Security Officer at Dell for 5 years. Previous to that at Honeywell. Previous to that at Lucent. Previous to that at FBI. So we've got an all-star team that we've built to continue forward with our mission. Some of milestones, tractions that we've had. We currently have the world's largest database of compromised credentials. This will be a part of this data solution. Second thing is we have over 600,000, I won't read them off here, we have over 600,000 users that have already signed up for our services over the last couple years. As we conclude the token sale, we will be opening up access to our platform. We also currently have thousands of paying customers on the platform. We've actually paused it so that we can fully integrate and test all of the blockchain technology, and then we will put it out to the world once the token sale is done. Also, we've received a significant amount of national media exposure, not necessarily on the blockchain side, but on the cybersecurity side over the last couple years. As I said before, it's clear something more is needed. We feel like this is the solution to provide universal cybersecurity for the masses. Thank you. One quick question. Has anybody seen our billboard? No. Because it's up on the ones that change every 8 seconds. And it's been up for the last 3 months, and I think I've seen it once or twice. So not great marketing for those that want to do that. Oh, yeah. We are announcing in the next 2 weeks our token sale. And it'll be a pre-sale for 30 days, and then we'll go to a public sale after 30 days. Ethereum and Bitcoin right now, we're trying to see if we can do some more stuff. But it's an ERC20 token, so in the pre-sale, fiat will be accepted. All right?
I turned the little switch on. I guess you can hear me. I only want to show one image off my computer, but I think it's a cool image. I think you'll like it. Let me just introduce myself. The profile that was published is a little outdated, so let me just tell you who I am. Where's that HDMI cord? Here it is. Right here. Plug that in. So my name is Brian Sewell. I manage probably one of the largest cryptocurrency hedge funds in the country, in the cryptocurrency space, Rockwell Capital Group. And so I am actively investing in cryptocurrencies and trading on a regular basis. The reason I'm here is because Will is a friend of mine, told me to come. I said, sure, Will, whatever you want, buddy. So I'm here. I'm also the CEO and founder of Bitcoin Academy, which has been operating for a couple of years now. Bitcoin Academy teaches students all over the world how to invest in and trade in cryptocurrencies. Got a bunch of products over there. I'm not here to sell you anything. So I'm not here to tell you all about that, but just want to let you know who I am. I think the most important thing to know is probably since 2013, I've made a living in the cryptocurrency space full time. So it's been my income, it's been my bread and butter. I've made a living and made a small fortune in the cryptocurrency space. And so I'm here to just talk to you about it. And I want to make it as valuable as possible for you. I'm going to turn this thing on so that image, it takes a little while for it to work. So we'll let that one go. I'll tell you what that means in a minute. That's probably the only image I'm going to show you tonight. So, as I'm seeing everyone here, you guys have taken quite a bit of time out of your lives to be here tonight. And I'd like to find out from you a little bit more about you and what is you're trying to get out. I'll tell you right now, if you want to make a ton of money in 2018, just sell everything that you have and buy BTC. And maybe a few other speculative coins. I mean, seriously. When Bitcoin was under $500, I predicted publicly that it would be over 10,000 by the end of 2017, and here we are, right? By the end of 2018, it's going to be over $100,000. And maybe in our conversation tonight, I'll explain to you why that's going to be the case. But if you really want to make money there, just don't try and time it. Just sell everything you have. I'm serious. Sell everything that you have, buy BTC and cryptocurrencies. And I'm a hedge fund manager regulated by the SEC. Okay? So, what's that? Yeah, self-fulfilling prophecy. Yeah, it's a self-fulfilling prophecy. Yeah, I'll explain to it why. Any of my students here? I met one of them here. Bryce is here. Anybody else that's part of Bitcoin Academy here? Okay, all right. So, I mean, the students are all over the world, but Bryce is here tonight. I didn't plant Bryce here. I didn't even know he was going to be here. He just showed up and said hello to me. But Bryce, would you just get up and introduce yourself and tell me, when did you join Bitcoin Academy and what are the results that you experienced? I'm sorry if I put you on the spot. Great. Which is crazy. This is working. Yeah, this is working. There's if you want to make money in the cryptocurrency space, you do one of a few things. One, you want to build a business in this space, right? You want to build a business that is going to provide services in this space. That's one way. Another way is to find an expert, somebody who really understands this space, and just give them your money, right? It doesn't have to be me, somebody else. But it's a difficult space to navigate. It's a complex space, but it's profound. So let's talk about that the way, because I think most of you are here because you want to make money in this space. Is there anyone here that doesn't want to make money in this space? Raise your hand. Okay, all right. Okay, so my assumption's correct. I think it's most important to know what this space is, what's going on, right? 80% or more, probably 90% of plus the stuff you hear in the media and stuff for us is a bunch of BS. It's just not Brian Sewell, but the other BS. I think I want you to just forget about most of the things that you hear in the media. It's a bunch of bunk. It's a bunch of people that are trying to catch up with what's been going on since before even 2009. I mean, when the cypherpunks, I know Will was messing around with this before Bitcoin was invented. I know that other people were involved in trying to create something here and finally did. Satoshi Nakamoto's white paper solved a major problem. It was one key piece of the puzzle to make this whole thing work. As I talk about Bitcoin, I'm going to use the word Bitcoin a lot in our conversation. I want to define it for you really quickly because I think there's a misunderstanding of Bitcoin. There's two definitions, I would say. There's the main definition that I've always used. The definition is on the top of Satoshi Nakamoto's white paper. In Satoshi Nakamoto's white paper, he invented not just digital money. That wasn't what he invented. He invented what I have coined as the value network, or the Internet of Value. And in that, he invented digital scarcity. And I'll throw these things out, and they'll just bounce right off you, because most of you have probably not thought about what the implications of this are, nor how it's going to completely transform our world over the next 20 years. I'm just telling you that Bitcoin is going to completely transform our world over the next 20 years, as much or more so than the internet has itself. It's not just digital money. It's a value network, right? It's a technology. Bitcoin is a lousy name. It really is. It's a lousy name for it because you hear the word Bitcoin, the word bit and the word coin, you try and put those together. It doesn't describe really at all what Bitcoin is. It doesn't. It really doesn't. Not only invented digital scarcity, it invented a system of trust by which power was no longer be vested in a central authority, a system of trust, right? That could scale. Our systems of trust are antiquated. They don't scale. If you look at the internet itself, right? What is the internet has transformed our world over the last 20 years. How many of you were around and paying attention in 1991, 92 when the internet was kind of coming out? Email was right. You heard the buzz about it and all the skepticism about the internet, about what it was. The media didn't get it at that time. Okay, all the stuff you're hearing, they didn't get the internet at that time. They don't get cryptocurrencies at this time. They don't get it. So you need to let go a little bit, and hopefully I'll give you a new image of what it really is. The internet has transformed our world. It touches our lives in every single way that we can possibly imagine. It's used by about 57.2%, right? That's the hedge fund manager coming out of me. 57.2%, that's actually a real number. I didn't just make it up. 52% of the world has adopted the internet at this point, and it's continuing to grow, right? Not 100%. Here in the developed world, we think that everyone uses the internet, right? But what was the fundamental invention that is the internet? I'm asking one of you. What is the internet? What is it? It's connection. It's a network. Information. What is the internet? What was the invention? We had connection before, didn't we? We had a telephone. Okay, it's a telephone. It's a telephone. Do we have telephones before the internet? Okay, so what else is it? What is it? What is the fundamental shift that happened? The military developed? The military developed anything before the internet? So it wasn't the fundamental shift? Yeah. A telegraph? Oh, Telnet, yes. That was made public, okay. Did we have digital before the internet? We did, didn't we? So that wasn't the invention of the internet. It changed the way that's for sure. It changed the way we communicate. But what was the fundamental invention? Yeah. That is a key attribute. That wasn't the fundamental invention, but that's a feature of it. Yes, absolutely.
Windows 95 is when you could start, using browsers.
Right.
And the masses could
Start actually using browsers. Well, okay, enough of the guessing game. Isn't this interesting? I'm talking to you guys about the internet, right? It has completely transformed our world over the last 20 years, and nobody in here knows what it is. Does it matter that nobody understands what Bitcoin is right now? Most people use the internet don't even know what it is. Most of the world is going to adopt Bitcoin over the next 25 years, 20 years, maybe 15 years, and are not going to know what it is. What was created when the internet was created? Decentralized information is a huge aspect of it, and it enabled something. The decentralized aspect of it enabled something. It enabled the free flow of information, right? It enabled the free flow of information because of the decentralization. It eliminated antiquated systems of trust that would not scale. They couldn't scale. Now let me break it down a little bit, because systems of trust, since the beginning of time, we've put power in central authorities, in individuals, in corporations, companies, governments, central banks, that kind of thing, in which information disseminates upward to a small group of decision makers that make decisions, right? Those systems are systems of trust, and we give them power and authority to act on our behalf, and that system doesn't scale. It's a chokehold, right? It's a constraint in a system. If anyone ever has read Eli Goldratt's book, The Goal, right? System of constraints, right? It's this major, serious constraint in any system, but particularly our systems of trust. It doesn't scale. The fundamental invention was the internet enabled the free flow of information, and then the features that came from that you mentioned, and other people have mentioned, the features that came from that were mind-boggling. You know what some other ones were that are mind-boggling? is that anyone on the planet, anywhere in the world, could use it. And they could create something on it. They could make something with it. I was an executive for 10 years in a Fortune 500 bank. I managed the systems and technology for that Fortune 500 bank. It was World Savings. Anyone ever heard of them? World Savings? Right? Right? They sold for $26 billion in 2006 before the banking crisis, and it all blew up. There's some smart owners, not me, but the Sandlers who ran that operation. But the free flow of information. Anywhere in someone's garage, people could build something, they could make something, they could develop something. And you know what companies did? You know what governments did? Local governments and cities? They came up with an idea. Well, this internet, it's public, it's everywhere, nobody has control of it. We need to get control of it. So let's create intranets, right? You know what an intranet is? Right? Let's have a network that we control, right? That's secure, that we can manage and protect. But what happened with intranets? What happened? You guys maybe not in the IT space, and so you don't know this, but some of you in the IT space know what happened to intranets, right? Intranets could not keep up the pace with the internet. The public internet, the innovation that happened on the public internet happened so freaking fast that they couldn't offer the same services and products and opportunities in the intranets. So they just bailed on the internet and say, well, we're going to use the, I keep intranet, internet, right? They sound very much alike. They bailed on the intranet and said, well, we'll just use the internet because it has the things that we need, and we'll create these, these secure portals, these VPNs and so forth, right? And so they keep figuring it out. The internet enabled the free flow of information. This fundamental invention completely transformed our world over 20 years and is still doing so now. The best definition that I've been able to find, the best way I'm able to explain to people what Bitcoin is, Bitcoin, or what I have coined the value network, or the internet of value, enables the free flow of value. That's the fundamental innovation. By no longer requiring these antiquated systems of trust. We don't need them anymore. The banks, the central banks, the governments that want to control the whole monetary money system, we don't need them anymore. What's happening? Hyper-innovation. Innovation at a pace that none of us can keep up with, not even myself, and I do this full-time for a living. And my whole team, I have a team of people that do this. Innovation is happening at such a pace that you're not going to be able to keep up with it. But I guarantee this, it is completely going to transform your world over the next 20 years. Can you hear me? Okay. Going to completely transform our world in ways you can't even comprehend. I'm way into this. I've been thinking about this a long time. It's been a full-time living for me for the last 5 years. I've built companies in this space. I've been thinking, I don't get it. I can't see. I can't see what the innovations are going to take place over the next 5 years, 10 years. I'm trying my darndest. I can see possibilities. I can see potentials. But I don't even know, and neither do you. And it doesn't matter. What's important is to understand what it is. See, Bitcoin, that Satoshi Nakamoto invented, this white paper, he invented this whole thing. All cryptocurrencies fall under the definition of Bitcoin. All cryptocurrencies. Digital scarcity, decentralized network, system of trust where power is not vested in a central authority. On and on. I can go on and on about these various features that are in there. And these are intangible features, features that you can't touch. But they're no less profound because you can touch, they're no less profound. They're tremendously profound. And that's why people have a difficult time digesting it and grasping it, wrapping their head around it, right? What does it mean, digital scarcity? What does that mean? Did you know digital scarcity is going to impact every single industry in the world that uses digital, completely transform it? And I won't go on and off on a tangent about how that's going to happen, but I mean, it's just absolutely true. So, if you understand this, Bitcoin is a technology. It's a technology, it's an innovation that has features that are desirable, all right? Now, I've been asked lots of questions, so I'm just going to ask the questions that are on some of your minds because I already know what they are. Okay? It's desirable. The question I get asked, what gives Bitcoin its value, right? What gives Bitcoin value? Right? I know what gives the US dollar value. It's backed by the good faith of the US government, right? That's what gives Bitcoin its value, right? No. I mean, that's what gives the US dollar value. What gives Bitcoin a value is what gives everything value. Okay? It's trust is a feature, yes, that will give people value. What gives everything is given value because we desire it. We desire it because of the features that it has. The features that it has. Now let's compare it to gold a little bit, right? So gold has features. It's scarce, right? It's fungible. It's divisible, right? You can divide it up, you can melt it down, you can shave pieces off. It's portable, right? You can take coins in your pocket and you can go down the street and you can trade them for a cow, right? Okay, so it's got features, and that's why throughout history we've used gold. In part, a big part of it is scarcity, is why we use gold, but a lot of it is the other features that it has, right? And it makes it desirable. Did you know Bitcoin has more features than gold does, plus all the features that gold does, and some of the features that gold has, it has much better. Did you know that? Yes? You didn't know that? Well, let me tell you about it. So scarcity, for example, scarcity, right? We know how gold, there's still gold that exists all the way out there, and the only thing that's keeping us from getting it is the cost. It costs money to get that gold out of the ground, right? And if it's not if it doesn't cost justify, we don't get the gold out of the ground. So gold is scarce, which is great, but we don't know exactly how many are out there. With Bitcoin, it's mathematical. We know exactly how many Bitcoin there are. There will never be more than 21 million Bitcoin. We know exactly how many Bitcoin are today. And in the year 2140, there'll be 21 million Bitcoin. The last Bitcoin will come into existence, and that's it. It's quantifiable, it's precise, it's exact, it's transparent, it can't be changed, and the whole world knows it, right? That's a little bit better as far as a feature, right? What about portability? If everything went to pot and you had gold stashed in your house, and now you want to take care of your family again, you want to build a business, how difficult is it going to be to take that gold and buy the products you need in China or Australia or Switzerland, and then do X, Y, Z to that product, add value to it, whatever it is, and then sell that product, right? No, you're going to be coming to me and say, hey, Brian, I got all this gold. Can I have some Bitcoin? Right? Because the Bitcoin is way more portable. You can send it anywhere in the world instantly, just like that. I can send fractions, I can send pennies worth, I can send millions of dollars worth anywhere in the world, period. It's way more portable. And that's why in different parts of the world, this is one of the things that I do. I arbitrage various markets in the world. Within the hedge fund, we trade different markets, and we take advantage of arbitrages that exist throughout the world. Sometimes, like India, for example, we're selling at 20% premium, right, in India because of that. So it's more portable. It's more fungible. Okay, Bitcoin is programmable. Is gold programmable? No. It's programmable. In other words, it's code, right? It's code that I can then now integrate in other pieces of code, and that code can work together to do something. For example, I can have a machine pay a machine. I can introduce it to artificial intelligence, and I can create autonomous machines. I can create vehicles that drive themselves that have no owner, that they own themselves. They decide what prices they're going to set to pick people up when you open up the Uber app. They decide when they're going to turn themselves in for repairs and get themselves fixed. They decide when they're no longer profitable and they need to retire. They decide how much they're going to pay for repairs. Machines can pay machines. And it can integrate with this code, this cryptocurrency code. So it's programmable. We can create contracts where we no longer need escrow service, right? I have say, a BMW 750, right? And I'm going to sell it to you. And so we create this agreement that you're going to buy it off me for $100,000. And in that, I write it right into the code that at the time I give you the $100,000 Bitcoin, cryptocurrency, that the car knows already that it can change its key fob, so my key will no longer open the car, and now your key will open the car. And that's built right into the contract. And so then I execute the contract by providing my digital signature, and I send you $100,000 worth of Bitcoin. Instantly, not only ownership transfers to you, but the actual ability to access the vehicle transfers over to you, with no one in the middle, no system of trust needed to make that whole thing happen, because it's all bed into the code. It's programmable money. You can innovate on this like crazy, and there's people doing it all over the world. There's more than $2 billion in venture capital out of Silicon Valley that are invested in startup companies like some of mine that are innovating, making Bitcoin easier to use and building the future. There's a new future coming. a new monetary system. Bitcoin is following a technology adoption curve. Let's see if that image pulls back up, because I want to share that with you at this point. Bitcoin is following a technology adoption curve. Is that thing going to light up? Nobody understands what's going on with Bitcoin. They're comparing it to tulips, or they're comparing it to some other asset bubbles, right? Because they don't get it. They don't get it. It doesn't make sense in their framework from the view that they're coming from, right? But it totally makes sense when you look at other technologies, such as televisions, TVs, video games, air travel, color TVs, cell phones, social media, radios, and on and on and on and on and on. Right? All of the technology that would happen, it gets adopted over time. Okay? Now, within the hedge fund, we have our own proprietary risk ratio by which we rate cryptocurrencies based on risk. And the way we do it, and I'll just tell you, this is proprietary information, right? I'll just tell you, the way we do it is we have ways of comprehending and understanding the ratio between the number of users of a cryptocurrency versus the number of speculators. All right? Now, as founder and CEO of Bitcoin Academy, with hundreds of traders that provide, like Bryce, that provide liquidity to the marketplace all over the world, I have a unique insight into who the market participants are. What influences Bitcoin, the price of Bitcoin, is the market participants, not the market critics. And so if you look at Bitcoin, who owns it and who's using it? And to give some rough general percentage, they're not exact, but I'll give you some rough percentages. About 40% are the early adopters, the libertarians. 10% of that is the Winklevoss twins, right? The Roger Veers, the others out there that got into this game early on, began mining it, and now are going to be super billionaires by the time this thing is done. Bitcoin's going to be worth over $1 million by the time we're done, right? And I'm on record as saying that on television, in Forbes magazine, on whatever things I go talk at, right? That's absolutely going to be the case. It's going to be worth over $1 million, well over $1 million. $1 million for me is conservative. It's going to be over $1 million by the time we're done with this. I don't know if it's going to be 5 or 15 years. I'm not sure. Definitely by 20, without question. So, what was I saying? Oh, the technology adoption curve. So, as we look at Bitcoin, we have this certain amount of people that are using it, and as I keep my ear to the ground, and as I listen to why people are buying cryptocurrencies, I realize that there is a base of people out there that are actually using Bitcoin. They use it no matter what the price is. It doesn't matter if it's $5 or $5 million. It doesn't matter. They use it. That represents another 40%. The innovators, the builders, the users. Right? Do you know one of the largest use categories of Bitcoin is charity? Did you know that? Is charity? One of the difficult challenges in the cryptocurrency in the world is that it's difficult to move money into remote places of the world in which there are needs. And it costs a fortune to get money into these remote villages and various places. And so Face and Christian Face are often turning to Bitcoin cryptocurrencies to be able to transfer value to these locations so they can help various people, which is interesting, right? You wouldn't know that unless you were in the space doing it. But yet you hear in the media, no, Bitcoin is for drugs and human traffickers, right? They don't even mention the fact that the U.S. dollar has been used for drugs and laundering money way more than Bitcoin ever will be, right? But they want to just blackball Bitcoin and cryptocurrencies. And there's no question it's being used for that. I mean, smart criminals use smart technology, and that's just the way it is. I mean, right? They use the internet, right? I mean, we should ban the internet because pornographers use it, right? So So this whole industry is following this technology adoption curve, and this user base is growing and growing and growing. Only about 20%, and I'm just using a round figure, but only about 20% of the Bitcoin, BTC, is speculators, are people that buy on greed and sell on fear. People that really don't understand the technology, but they're hoping to get rich on it, right? And they invest in it, and then when there's bad news like Bitfinex gets hacked, or Michael Hearn, if you guys were around, Michael Hearn announced that Bitcoin is dead, right? The media's announced Bitcoin is dead close to 200 times in the last 5 years since I've been involved in this space. If you had a company, a corporation, in which the news announced the company is dead, it's over, it's destroyed, almost 200 times, would you ever see a performance in the stock price like you've seen in Bitcoin? No. Why is that? Because the people, the market participants that sell on fear, they only represent a small percentage of the market. And the percentage of that market is revealed to us every time it happens. We're going through one right now, right? Bitcoin dropped just below $10,000 just now, right? We're going through right now. These are the speculators selling on fear. I can look at the past performance of the market, the percentage that is sold, and I will quantify those numbers, and I can tell you exactly the percentage of the market participants that are speculators versus the percentage of the market that is actual users. And because of that, BTC will see the greatest increase in value from a risk-adjusted standpoint, which is what I look at as a hedge fund manager. In 2018, it'll be over $100,000 by the end of 2018. It'll see the largest return from a risk-adjusted standpoint. That doesn't mean there'll be other cryptocurrencies that will outperform from a price standpoint. That's absolutely true, right? But that's like throwing money at penny stocks, right? Of course, some of them are going to work out. Over the next several years, 98% of the cryptocurrencies out there, the ICOs that are coming out, are going to fail. They're going to fail as they don't fulfill the promises. There is you can almost draw a precise parallel to the dot-com boom and bust. Through the 90s, all the speculation that went into companies that had no product, that had no service, that had no revenue, that had no revenue model, that had no customers, right? That sold an idea, and by selling an idea, they drew in irrational investments, right, into their entity. But when the whole thing blows up, and it's going to blow up when investors lose confidence that the cryptocurrencies they invested in can perform or are going to fulfill that promise. That's when it'll happen. And I don't know exactly when that's going to be. I have my own guesses that I use internally, and I'm not going to try and predict that. I don't know when it's going to be. I just know it's a natural part of the cycle that's going to take place here. And out of that is going to emerge the cryptocurrencies that are going to completely transform our world. The Googles, the Amazons, the Netflix, the companies in the internet space. In 2000, when the whole thing busted, the internet die? No, it went on to change our world. What it did is got rid of all the junk in which all the irrational investments went in, and money changed hands. Money changed hands. Money is always moving from dumb money into smart money. And it's happening right now today. Right now today, there is a bunch of dumb money out there selling all their BTC, and there's people like myself that are running a hedge fund that are picking it up, right? Are just picking it up and drawing it up. And as there becomes fewer and fewer available resources to the dumb money, and it becomes more scarce, it'll continue to rise and rise and rise and rise. I mean, and it does this really sharp. I mean, you'll probably see by tomorrow, the next day, it'll be back up to 10,500 or close to 11,000. I mean, it dropped below 10,000 today, and I don't know how. I've got to spend some time doing a little bit of research. I don't know how much it's going to affect. But those price movements tell me something about the market. They should tell you something about the market, about who the participants are, who's speculating, who's using the technology. So the most critical thing that I want for you guys to understand out of my conversation, I want to answer some questions a little bit here, but I want you to understand what Bitcoin is. And I'm talking about all these cryptocurrencies. I'm not talking about just BTC, even though I believe BTC, from a risk-adjusted standpoint, is going to outperform. But with that said, then you know that this whole thing makes sense. You saw the curves on that chart, right? You saw all the technology adoption curves. They go like this, don't they? They just go like this. And that's what BTC is doing. Just going like this. It's been adopted. And it's sprinkled with asset bubbles because it has features of an asset class, and you have a percentage of the market participants that are speculators. And so it has these little, goes like this, but it goes in these little bubbles, right? It goes up in these little bubbles. All right, and if you can time those bubbles, you can make a lot of money. But what the heck for? I mean, I did over 4,000% return in my hedge fund over the last 2 years, and I didn't time the market at all. I just bought BTC, right? I just bought Bitcoin, I just bought Bitcoin, right? And so, and it's just really that simple. So, in getting into how to make money in this space, and then I'm going to take some questions. There's really 3 ways. One, build a business like Bryce. Bitcoin Academy has some courses. I know those guys. Bitcoin Academy has some courses that teach people how to build a business in the space. Buy cryptocurrencies and hold on to them. Find an expert. Find somebody who really understands and gets this space, and let them manage your portfolio or investment in the space. If you're trying to invest over $100,000 or something, you know, then I would have somebody else manage that into the space. It's complicated. Don't chase ICOs. Don't do it. Most people are going to lose money in the Bitcoin cryptocurrency space. Just like most people lost money in the dot-com bubble in the 1990s, right, when the whole thing blew up. Most people are going to lose money in this space. But there will be some, there are going to be a lot of billionaires being made. There already has. There's been a lot of billionaires. There's, well, a handful of billionaires, I guess, that have been made, and there'll be a lot more billionaires that will be created in this space. Bitcoin and cryptocurrencies are used by less than 1% of the population. Less than 1% of the world population, closer to 0.5%. In the next 15 years, that number is going to increase to about 50%. 50. 15 years. 50%. Okay? We're not, it's not the top of the bubble. You don't need to go run and find some other cryptocurrency that's going to do what Bitcoin did, right? Bitcoin is not done. BTC is not done. Neither are the other cryptocurrencies. Okay? That's probably the time I have, right? But I want to answer just a few questions. Is that okay? Okay. So I answer just a few questions, and let's have we'll have a panel for some more questions. I'll start with there. It's not a love affair, but go ahead. It's close to it. Yep. Yep. Ethereum is a great coin. It's a great long-term investment. Ethereum's going to do great as well. Let me explain something really quickly. People do not adopt technology because they understand it or know what the features are, right? None of you here knew what the internet was, really, right? Or how most people that use the internet don't know how it works, right? It's about branding. It's about gaining the trust of the marketplace that you're serving. Bitcoin has the longest track record and therefore has the highest probability of capturing trust. The other thing it has, it's the most mature. It has, next to Ethereum, has one of the largest user bases are using it. And what's going to drive the price in 2018 are institutional investors like myself. Institutional investors are going to drive the price. And when institutional investors come to the space, they're not looking for high returns. They're looking for the lowest risk. And the options available on Bitcoin provide the lowest risk, namely liquidity, namely infrastructure, its maturity of its market base, and the ability to be able to short it and be able to purchase futures or sell futures on it, right? There's more options available to me. I'm managing a $150 million fund. There's more options available to me to be able to manage the risk. And that's what institutional investors want. They want the safest exposure to cryptocurrencies they can get. And so as institutional investors come into the space, which they've already started, and they're coming through 2018, you have billions of dollars trying to manage risk and get exposure to the cryptocurrency space. Where's the most of that money going to go? It's going to go into BTC. It just is, because it provides trust, not because it has the best features. I mean, there's other cryptocurrencies that are better than Bitcoin, that will do things faster than Bitcoin. Yes, I get all that. But we're still on SMTP, right? I mean, there's better methods of sending email. There's better methods of all kinds of stuff. But we still use the stuff that just works, right? Right. Okay, there's a question here, there, and then over here. Go ahead.
So I've been doing this for a couple of years now, and I have about 16 positions that they come and go.
Yeah.
Is that too much as far as having, or would you focus on top 3 positions? And if so, what's your number 2?
That's a good question. I don't have a number as far as there's too much. I do know that 2% of them are going. This is kind of a ballpark, a gut instinct. About 2% are going to fulfill their promise and do great. 98% of them out there are going to bomb. Okay, all right. So there's different investment philosophies. It depends on what your investment philosophy is. You can go out there and throw money at everything. All right, try and find the best things, and hopefully within that pot of stuff that you acquire, that you get the 2%, and it makes up for the rest of it. Right? That's what venture capital firms that invest in startup companies. It's the same thing. We're investing in startup companies because the cryptocurrency has to do multiple things. Number one, you have to be able to read the code, understand the code, and see if the code actually can do what they're saying that it can do. Right? And then number two, if the code can do what it says it's going to do, then you have to look at the marketplace and say, will the marketplace receive that solution, right? Because the code, the crypto token, offers a solution to a problem in a marketplace. And so you have to look at the marketplace and say, okay, does it solve that problem? And will the market receive that? An example of that is there's a couple cryptocurrencies out there trying to solve the problem of scalpers and Live Nation and Ticketmaster that are, take a huge margin of profit out of the entertainment industry and live sports events and all that kind of stuff by providing transparency. So they have a logical vision. They sell this ICO. They raise $50 million, and they throw these cryptocurrencies out there, but they don't understand the ticket market at all. They don't understand that industry at all. And the industry will not accept their solution. In any startup company, you may have a great idea. It's a great product, right? The best thing since sliced bread. What's a good example? No one's not coming to mind. But you have this product, right? Selling bottled water. That's not a good example, right? Or selling some other product, and you go out to the marketplace, and it just bombs, right? That happens every single day. That's going to happen with cryptocurrencies. But to get back to answer your question, it all depends on your risk tolerance. In the hedge fund, I only own about 10. Okay, it's difficult to manage even that, but liquidity is a major issue for me. So you're probably invested in some that I wouldn't invest in because they don't provide the liquidity that others possibly could. Right? Can you get my screen up? Because I want to play that Nerealville, and I want to talk about Nereal for a moment. Is my screen going to be able to come up or not, do you think? Yeah, I'm pretty bullish on. Yeah, what's that? Oh, that's that question. What's that? What are my concerns on BTC? I love BTC, and I have, to me as a seasoned entrepreneur, problems are opportunities for me. And so my concerns are all real opportunities, right? The biggest concern to the cryptocurrency space is regulatory issues, right, is regulation. That's the biggest concern because it keeps investment money from flowing into the space. It keeps investment money from flowing into the space. But with that said, I really think that there's an opportunity to take advantage of problems. So for example, with Bitcoin, fees are high, right? There's all kinds of complaints, right? The fees are high with Bitcoin, right? It can't scale and da-da-da-da, but damn it, look how far Bitcoin has come. It's got one of the best development teams on the planet behind this. Bitcoin is going to be what it's going to be, and it's in process of becoming. It's not there yet. If you don't know that, if you don't know that these things, I mean, it is not the same Bitcoin that it was started with Satoshi Nakamoto. It is different today. And that is going to continue and continue and continue. I have a lot of confidence and faith behind that development team that's behind BTC. And so, yes, there are real challenges and problems with that. And there's a reason why they haven't gone the Bitcoin Cash way or other directions. There's a reason behind that. Bitcoin is not going to be all things to all people, not in the least. There's always going to be 1,000 cryptocurrencies, and each cryptocurrency that survives is going to be the cryptocurrency that successfully fulfills its promise for that niche, right? Talking about Bitcoin and Bitcoin Cash, for example, or Lightning Network, right? Bitcoin, BTC, is not a payment system. It's not going to work as a payment system based the way it is right now. Will it someday? Who knows? I don't know. If there's a possibility of it happening, I think it will with the development team that we have. It's probably maybe going to remain a store of value, as people talk about, right? And some other cool things that it can do. But it's the foundational innovation. Lightning Network, is a solution, and we're on a pathway to a Lightning Network. We'll see if that happens or not. So when you ask me what's my biggest concern, it's a difficult question to answer. I love what the media has done. I love the news. I love all of the critical nonsense that we hear on the news all day because it keeps giving me an opportunity, right? I'm trying to get more and more vested in this space, and I would hate it for people to really get it. I would hate it for people to understand it more than they do because most people don't. And most of the buzz the media you hear there is a bunch of crap. So I'm grateful for all that because it provides an opportunity for someone like me to stay in the space. But, okay, here. Oh, you're my number 2 and 3. You guys. you guys want to know what my picks are, right? I'll sell you a course, and you can. All right. So there's some great ones out there. I like Ethereum for a lot of reasons. It has some challenges, but I think we'll overcome the challenges. NEM. is one that I got in on early, and it's paid off, right? I've done, I don't know, I've done about a 8x return over the last few months on NEM. I think NEM has some real potential, possibility. So that would be two, Ethereum and NEM. There's more that I'm looking at, but those have some good upside. There's a difference between there's different answers to different questions, and what I mean by that is a difference between saying, well, which cryptocurrencies are really going to fulfill their promise, and which cryptocurrencies are going to give me the highest return, right? And that's a different question, right? Because you may have a cryptocurrency that gives, I mean, BTC is not the best cryptocurrency out there, but I think it's going to generate the highest return from a risk-adjusted perspective, right? I have to manage the risk of the portfolio, and therefore from a risk-adjusted standpoint, I think it's going to have the highest return, and it provides enough options for me to manage the risk, the downside risk. In the hedge fund, we use an automated arbitrage system that arbitrages various markets. So we have an actual application that's running in a black box that's actually looking at values in different markets and executing trades like every 20 seconds. Every 20 seconds, bing, 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 bing. It's just going like crazy. So we're interested in making money and taking advantage of opportunities. We also use artificial intelligence. One of the things, I need to tell you something really quickly before, I can't, oh, it's showing right here. I'm going to show you a video in a second. Will and I met years ago, and we were working together on a project that was, I'm a data scientist. I studied at Stanford and also Johns Hopkins University, so I'm into machine learning and artificial intelligence as well as into cryptocurrencies. Those are my two main passions. Will is the same, exactly the same. He's into AI, he's also into cryptocurrencies. We we got together, and it was like fireworks going off, and the ideas just kept going and going and going, and we launched one company together that's kind of on the shelf right now, but I won't get into that. But the foundational technology that I think is super, super important, and I'm an investor in Neureal, by the way. So I'm an investor in Neureal, which is a new token. The ICO hasn't even happened yet, right? I don't know how much you guys know about it, but Neureal will become the world's largest supercomputer for artificial intelligence. When it comes to artificial intelligence, one of the best ways to make it work better, to be able to predict the future better, is to make it bigger and give it more data to crunch, right? Make it more massive and give it more data to crunch. And with current systems, we're limited. So by using a decentralized system like the blockchain and creating an architecture that enables it open source so anybody can contribute data and contribute processing power to make that thing scale, is going to revolutionize the future. It's going to be a platform by which we solve cancer, the problems of cancer, by which we completely transform our world. The more we're able to predict the future, as you'll hear Will say, the more we can actually control the future, right? It's so weird because when you have all this information data, you can start predicting the future. Then you look at the elements that are going to create that future, and then you can begin to transform it and change it. And so that's part of Will's vision, and it's very, very exciting. If anything else, and he's got the skill set, and he's building out a team that I think is going to fulfill on that vision. And so, if you haven't had a chance to learn about Neureal, Will won an award for putting that architecture together and landing it. So I'll let him answer the questions about that more as we get into it. Want to show the video? Yeah. Okay. All right. Let me show the video, and then I'm going to have to quit, and we're going to ask some questions here with the panel in just a minute. Okay. Let's see. Like, where did it go? There it is. Great vision, huh? That's a great vision. And we have the technology to be able to fulfill that vision, by the way. And Noreal is a foundational architecture that can help fulfill that. So anyway, I'm going to end my comments. I know we can go all night with this. I'm going to end my comments. I appreciate your time being here. We're going to have a panel, as I understand right now, where you guys can ask any questions that you want. So let's do that. Thank you.
I know you guys probably got most of your questions answered with Brian there. So if you have anything, you know, we waited till the end. So if you guys have anything for the rest of us, that's what we're doing here now. So.
Right up here? Go for it. Yeah. So great presentations, all of you. Thank you. But I was a little conflicted when going through them because all of you had very differing messages. And it's almost like the one person trumped the next and then the next person trumped the next. What do we take from this as future investors when we're getting such mixed signals across the board? Thank you. Yeah, yeah. Day trading is the way to go. Hodling is the way to go. Bitcoin is the way to go.
You forgot ICOs.
ICOs is the way to go. Don't do ICOs. Yeah. So very, very different messages that came across today.
I can start by doing that because I'm the hodler, and we have a big community behind us, and it's a hodling culture, which actually props up the marketplace. And so I think that this space is growing incredibly fast, and it's very vast, and it's impossible for you to actually focus in on a particular area or all of it because there's just so much of it. So in all aspects, you have to decide for yourself what's your overall objective with investing in digital assets and cryptocurrencies. Are you looking to be somebody who wants to, you know, be a position or day trader who wants to dedicate full time to doing technical analysis and putting in different you know, buy and sell orders and kind of act in that way? Are you somebody who's more along the lines of, I just want to invest in, you know, really good digital assets and hold on to those for a couple years, and, you know, I'll just add it as part of my, you know, 401k, you know, real estate, bonds, stocks, you know, add a little digital assets to that? Are you somebody who, you know, wants to, you know, like Brian, you know, and, you know, be part of the American Bitcoin Academy and do like local Bitcoin transactions, or, you know, be part of the hedge fund, or, you know, there's a couple ICOs here. You know, those are tremendous opportunities to bootstrap, you know, a blockchain startup. You know, you can, you know, we have a number of local blockchain startups in Utah, and you can go and you can talk to them and attend all the different events, and you can sprinkle a little bit of capital towards them as well. And then, you know, just, you know, continue to diversify and you know, kind of decide what you want to do with it. But it's ultimately up to you. It's a very large space. I don't know if you guys.
A couple years ago, we did a trade show, and they had me man a booth, one of my least favorite jobs. But I was manning this booth, and we had this big screen. You remember that screen I had with the candlesticks up there with the trade screen? We had something like that up there with lines and indicators on it. And it was really interesting to watch people walk by, and some people would look at it, and it's like their eyes would get big, and it was like a magnet. They'd come up to it and go, "What is this? I don't know what any of this means, but it's so cool." And then you'd have, I remember one woman in particular, I was just kind of standing there in the back. I didn't have my tag on, so she didn't know I was with the group. She walked by that screen and looked at it, and she said to her friend, "Can you imagine looking at that thing all day long?" Oh. Trading either attracts you or it doesn't. And I'm never going to tell anyone, trade the way I do. There's only one way to do it. There's a lot of ways to trade. There's a lot of ways to invest. Again, it matters what your risk tolerances are, what your personal preferences are. I've got some people that have no time. And I give them a strategy where they can spend 10 to 15 minutes looking at their charts, they place a trade, and they let it run, and they're gone. I have other people that want to sit there and look at charts and do the technical analysis and do the drawings. So there's more than one way to do this, absolutely. And don't pigeonhole yourself. Explore and find out where your personal preferences are and risk tolerances are. I don't know if we differ as much as we are showing you different perspectives on this opportunity.
Just working. Next month, I'm the keynote speaker in New York at the Money Show, which is the Traders Expo, which is probably the world's largest show for traders, actively trade futures and so forth. Been going on for 35 years, both in New York and also in Florida. 72 to 81% of people that day trade lose money. There is a market and business out there for drawing that people. When you're involved in that, you are speculating. You're betting on the future. But that's just the fact. You take the fact as you deem it. The cryptocurrency, as I described, is a technology that's being adopted over time. And you look at the curve that it's been on, it's going to continue. From a risk-adjusted standpoint, there's no way to outperform the long-term growth of cryptocurrencies through seeking to time the market. I used to day trade in college. I traded for a couple of years using the TradeStation platform, and I used to program and write and build systems in that thing, and wrote half a book called Market Psychology in Trading and Time Market. And I get that space. I think that there's conflicting views, as you said, is because we may have different opinions about that. And so you get to, each of you take it the way it is. The other thing to do is to build a business. There are multiple ways. You can attempt to trade the market and time it and hope that you're part of that 20% that is successful. So that's one way to do it. The other way to do it is to build a business in this space like Bryce, right? Bryce provides liquidity to the market space, and by doing so, he earns a fee for doing that. And right now, the fee is like 10 to 12%, because there's not as many people as I teach in that course. I can't teach enough people how to do that business to fulfill the demand. So the margins keep increasing. Historically, in the past, they've been like 5%. In other words, every time he sells Bitcoin to people, he's making 10% on his money, 12% of his money. He made $60,000 just in the last few months, right? So that's a way to make it. You can make 100% on your money every single month with little to no risk, right? All you do is you buy the Bitcoin at spot and you sell it to somebody at 10% above the spot. There's no risk. Well, I shouldn't say there's no risk. There's risk. I teach you about in the course and how to mitigate those risks. So there's always risks. But that's the other way. And then the other way is just turn your money over to somebody who knows this space and gets it, and take it for the long haul. Ride the cryptocurrency space all the way out. Be a part of that group that invested in Google and Amazon in the very beginning and just held on to it for the long term. And then go play with your family. Just forget about it. Just hold on. Just invest it and just go. Quality of life is really important as well.
Question about Nareel.
Yeah.
So I have my own method of trading. Been doing it for a while. Do a lot of research, and I researched a company called Syndicator. And Syndicator, I personally have invested in, and it's right exactly what you're looking at.
It sounds similar anyway.
It sounds very similar. That's
Yeah.
my question. What is different? Because I look at two things when I invest typically. Is what's the value, which there's a lot. You've obviously shown that, and who's behind it. If I can
We have a different architecture. We're a different.
By the way, for any of you who have questions, there is a streaming audience, and they would also be very interested in your question. And so if you could just approach the mic when you do address the panel, that would be outstanding, because we've got a lot of people watching. So, thank you.
Yeah, you were saying that you were asking how is Real different than the other projects out there, including Syndicator or a bunch of them. So we started 4 years ago. We're the first AI plus blockchain project that's still around. So we have our roots in there. It's me right now mainly, and James Alton is also on our team. He did the first contract on Ethereum. He's gonna hopefully he's worked with us in the past and whatnot. So we don't have like this all-star team like you're kind of put together, Chad. Put together. So it's mainly just me. And as far as how we're different, there are no projects that are the same as what we're doing. So the architecture I came up with, me and Jordan's one of the founders. He's sitting here. It's a unique architecture in the space. It's built. It's different than most of the people out there because it's not. It's agnostic to the AI that's involved, and so it's the only project that brings a narrow purpose to the space and doesn't provide the solution. So what that means is that it has the greatest potential for growth because it doesn't restrict the AI that you use, and it's completely decentralized. So because I've narrowed the focus and made it the most simple possible blockchain project for AI, it's probably the simplest that's out there. It has the most potential for long-term growth because it's doable and we can actually finish it, and it's really the negative things about it are the adoption. Like it's really just about adoption at that point in marketing, because the technology itself is actually relatively simple compared to all these other projects. I think that's kind of the main thing.
Thank you.
Do you want to talk about yours a little bit too?
Sure. Why don't we go with this question and maybe after that?
Okay, my question is, I got into crypto last year, so still pretty new. What is your guys' opinion on mining? Obviously, if no one mines crypto, we can't buy it, but do you recommend to your students or whatever to just get on and buy crypto or to actually try and mine it?
I'll jump in there. So one thing that I didn't talk about when I was up there, that when I sat down I realized I started mining crypto in 2012 and had talked about how internet was a love in my life. Crypto has become that love in my life. But I don't mine a lot just because I haven't been able to buy in on the miners as quick as others have. I've made a decent amount on mining. In fact, like I said, I started mining in 2012. And the first wallet that I had, I lost the password to. So I don't even know how many Bitcoin, if there are any, are on that. But it just depends on what you want to do. There's so many aspects of blockchain and Bitcoin that you can do. It's one of those ways that you can continue to make money doing it. My thoughts.
I'll actually talk about that one real quick. So I'm an investor in PowerBlock, where we actually sell power to miners. And so what we've created is an exchange for where we'll sell power to Bitcoin miners, Ethereum miners, Monero miners. We'll also resell equipment as well to people who are interested in mining, as well as sell pods to people who are interested in mining as well. And from what I've seen in the space right now is, as an individual miner, you can join mining pools, but it would mostly be a hobby. So if you want to learn a lot about the blockchain, you want to learn a lot about, how to, set up your mining rigs and how to set up your wallet, and you want to stay up all night trying to replace burnout ASIC chips and have a really hot house, because it generates a lot of heat. You'll learn a lot about mining. You probably won't make very much money. You're probably better off actually just buying it on the open market. Right now, there is a big group of miners who are looking to scale up their operations just to be competitive. With Bitcoin especially, the difficulty rate is increasing significantly, and so the people that I'm talking with now and selling power to, before they were able to mine on 1 megawatt of power profitably. Now they're scaling up to 20 to 50 to 100 megawatts of power, which is a ton of electricity, because essentially what you're trading is electricity for Bitcoin or electricity for some sort of cryptocurrency. And so you're always, facing this sort of minor dilemma, which is, do you sell your cryptocurrency to pay off your electricity bill, or do you try to hold on to it a little bit longer and hope that it goes up? And so if you want to learn a lot about mining, or the blockchain, then definitely mine. But it is getting really competitive right now, and there's a lot of big players that are centralizing in a few locations across the world.
Cryptocurrency is a learning experience. Go ahead. Learning experience, if you want to mine, that's what it is. It's learning experience. You're better off making money just buying the cryptocurrency.
Being that you're in the space and you're regulated by the SEC, I had a question about raising private capital and private funds. I like to hold a lot of my money in real estate, and at this point I see how valuable the crypto space is, and so now I'm considering raising private funds through self-directed IRAs, maybe putting lien positions on my properties and things like that so I can get more into the crypto space. But I guess I don't really have the direction there. Do you think you could put something maybe in your courses, or maybe even have a mastermind or something like that put together so that people that understand raising private capital and private funds and securing it on something real, like an asset, like a house, maybe do something like that?
Yeah, actually, if you go to bitcoinacademy.com, we have a course for $9.97 that's called How to Invest in Bitcoin Like a Pro. It'll give you the kind of a synopsis of the whole thing, and then with that, you get on weekly live calls with me, like every other week, and I can give you feedback. But there are companies out there right now that doing some cool stuff with real estate and cryptocurrencies. The values of real estate on the cryptocurrencies. It's really kind of cool stuff. Don't leverage all your real estate and throw it in cryptocurrencies without working with somebody that knows what they're doing, because you'll get hurt really bad.
Mm-hmm.
It's kind of like mortgaging your house and betting on penny stocks, right? I mean,
yeah.
Is it on? Hello? Would you mind if I gave a quick retort to something that was said earlier about timing the market? I think the number that I think it was 70% was the number that you gave for, I think that number's low. I think if you look at the retail trading market for day traders that are out there, I think the number's probably a little higher as you take it on a global scale. Main reason is most people that go out there and trade have no plan. They have no rules. They heard something, they saw something on CNBC, they saw something on Bloomberg, they heard a rumor from a friend, and they get in the market. If you plan on going into the market with no rules and no strategy, you might as well take your money out of your wallet and light it on fire, because you're doing the same equivalent thing. I will take exception to one thing. In our group, we make sure that our students have rules, they have strategy, and they have tools. We actually flip that number on its head. I can't control everybody's emotions, and I can't control everybody's greed and fear and all those types of things. But if I can give you some rules, and if you can keep them, we can change that number for individuals that are trading. So that would be my word of warning on that for day trading.
I want to jump in here on that. I think what you're seeing here and all the different things that we do is that trying to time the market without intelligence is a dumb way to do it. Buying and holding is a very smart way. In fact, had I originally just held, I would have made significantly more money than me trying to unintelligently try to time the market. So if there's one thing that you guys take out of this, it's definitely buy and be in it for the long run. Don't be in it for the next month to 2 months. be in it for a lot longer time frame. I agree on some of the things that you said, specifically that 98% of all ICOs are going to fail. That is a reality. It's just, it's number statistics. That's what's going to happen. And so it's important as you guys invest in those, in ICOs, along with the more stable currencies, the Bitcoin and the Ethereum, it's important that you are really focusing on team. Is this going to be a business that's going to be around in 5, 10 years? Is this going to be something that's needed in the marketplace, not just today, but is this going to be here 5 to 10 years out? That is super important. I'd also like to say that we're doing an ICO, right? The majority of my money is sitting in those top cryptocurrencies. Ethereum's number one. I'll make a prediction. I'll say Ethereum's going to outpace Bitcoin. I know you're going to disagree with me on that, but I think it'll outpace Bitcoin, and I think it'll do it very, very quickly within the next year to 2 years. So that's a statement that I'll lay down here, and hopefully, yeah, let's do it. That's right. I'll put my Ethereum to your Bitcoin. 1 Ethereum to 1 Bitcoin. So.
I actually have that same bet with another friend actually as well, as which one's going to outperform which coin by the year 2030. I'm betting Bitcoin's going to outperform Ethereum. Off the 2017 performance, just a quick stat there. Bitcoin's performance was 1,100%. If you were to just buy it and hold on to it. And so unless you can actually outperform 1,100%, then don't actively position trade. But if you have a system in place and you want to give it a shot, then go for it. But by hodling, you know, it's tried and true, and you'll save yourself some sleep at night.
What do you think about technologies such as Hashgraph and Tangle? How do you think that will affect blockchain technologies?
Hashgraph and Tangle. So those are like side chains on Ethereum. Tangle is?
No, they're completely different.
No, Hashgraph I read about. I read about Hashgraph.
Tangle is
Who? IOTA's doing Tangle? So I know IOTA is centralized. So like they've got centralized aspects. So Tangle is sort of like the Lightning Network. So you have Bitcoin. So it's simpler to understand Bitcoin. So you have Bitcoin, which is completely 100% decentralized. That means that no one or no you have to have a group of actors that are greater than 50% or whatever to control the chain. Lightning Network introduces more of a centralized aspect to it, which means that if I can set up a network with you, me and you can set up a network, and we can trade Bitcoin on the side, but that requires me to trust Jason here. So we could set up a network, but me and Jason have to trust each other, right, for that network. I mean, for that those transactions happen. Those happen off chain, and then they're connected back to the main chain. When you get into what it opens up the door for is what banks usually do today. So what you can get in that situation is a centralized authority that acts kind of like a bank does today, and so they become the node in that network. You can grow that network. I can give money to you. You can give money to you, and it's not, because it's not 100% decentralized. It doesn't have the full protection during those transfers. Like when it gets back to the main network and it's finalized, it does. But during those main transfers, it's not a perfect, you're still trusting the other person at some point, right? There's, in the protocol itself, if they don't follow through, they lose money and there's incentives and all this sort of thing. But it's it's still not as trustworthy. So in the end, people they'll feel some of the same things Brian talked about, where you're putting your trust in a central authority, which is which is what we tend to, which is not as efficient. So anyway, so the Tangle's like that. Hashcash is like that. Hashcash doesn't even have, I just remembered, Hashcash doesn't have, they haven't introduced the stuff that they thought was going to be the decentralized stuff. So it's completely centralized right now. Its speed comes from the fact that it's decentralized. I mean, centralized. So when you have a centralized network, just like the Visa network, so the Visa network does how many more transactions per second than Bitcoin? I forget. 20,000? 100,000 more transactions per second or something. So because they're centralized, they're more efficient in that respect. So these are the kinds of technological problems that the whole blockchain, Bitcoin, or whatever cryptocurrency industry is struggling with to get those out there. So it's still growing in its infancy in that case. One thing that's great that nobody else really said here, one thing that's great about the whole industry is that it's all open source, and the implications of that mean that if you pay a developer $100,000 and they go out and they create something, okay, everyone gets to use it. Everyone. It's not like it's locked up in a company. If they fail, right? If they fail, quote fail, the code is still there. They might have failed for some particular company or some particular project, but they didn't fail for the whole collective, right? They've added to the value of the collective. So in normal companies, that doesn't happen. You know, you don't usually, like if you create some new product, you keep the IP, you hold on to that IP, it never gets out into the, into the public. Like you die, nothing gets out, right? But that's not the same for open source. So I just wanted to add that in. So that's a benefit of, even though 98% will fail, that doesn't mean 98% of all the code is going to fail, right? So anyway, I just wanted to add that.
My question, and maybe the panel can maybe address this, is the taxing piece of associated with these investments. How does it work, and what do you recommend? And are there any best practices associated with it?
Taxes?
Yeah.
All right, I'm not a tax planner.
How is it taxed?
Put your money in cryptocurrency and keep it there. Don't take it back out. Yeah, they're not taxed. Look, the IRS wants the money. So as soon as you take your money out of cryptocurrency, if you hold a long-term investment, there's a strong argument to be made that it can be taxed in a capital gains in a capital gains way. And from a hedge fund standpoint, that's absolutely the case. From an individual standpoint, I teach students how to trade Bitcoin on a daily basis, and it's different. It's a different tax game because they're buying a product and selling a product. And so it's your total revenue minus your cost of goods sold. Your revenue is what you sold it for. Your cost of goods sold is what you paid for it, right? And that's your gross, or your net. I'm losing my number, your net. And then minus your business operating expenses. And then that's your tax liability after that. So that way it's taxed as a traditional business, like if you're to buy screwdrivers and sell them. The IRS treats Bitcoin as property right now. So it's defined as property. And therefore, it typically is property. But as soon as you start buying cryptocurrencies, you make 1,000% return on your money and you want to turn it back into dollars, they want it, right? They want that capital gains. Although technically, the law doesn't say that they can take it. They will twist the portion of the law to say, look, you've made a gain on an asset, that's ours. And just as if you bought screwdrivers and the value of the screwdrivers went up 1,000%, right? And you try and say, no, cost of goods sold. No, the IRS come after you and they say, no, you made a huge gain on that asset, on those tulips or whatever you bought. Right? So we struggle that within the fund. One of the things that we do within the fund is we receive kind investments. In other words, people can invest in the fund with cryptocurrencies, and they can apply anyway. And then I'm trying to find a way that I can give money back to investors, give value back to investors by giving them the underlying assets, and then letting them determine when they convert that back into fiat currencies, and that triggers a taxable event. But so far, I've got no attorney that will bite off on that. So, not because it can't be done. Most attorneys are still behind the curve in the cryptocurrency space because there's no precedent, right? We just have to take a gamble. So anyway, that's my 2 cents.
I'll actually add to that a little bit because I'm trying to deal with a large tax liability right now. And so there's essentially three things that people are going to be doing in the crypto space. I've talked to a number of CPAs, and they're going to say that crypto-to-crypto transactions, generate a capital gains, a taxable event. You got to pay capital gains on that, whether or not it was, short-term or long-term. You have to pay it. So if you went from Ethereum to Bitcoin, or Bitcoin to Monero, or Monero to Dash, that's a taxable event each time you move that. And so that's going to generate a huge tax liability for investors. And any CPA that's going to be following the rules is going to tell you that you're going to have to pay taxes on that, even if you didn't even liquidate it to US dollars. Just crypto-to-crypto transactions is taxable event. You're also having a number of people who are saying, well, that's not fair. I'm only going to pay taxes when I convert from crypto to US dollars. And so then you're going to have a number of people who are saying that crypto to crypto was like-kind property. I'm not paying taxes on it until I actually liquidate to US dollars. So you're going to see some people do that. You're also going to see another group of people who are saying, you know what? I have everything in an offshore Ledger Nano wallet, right? You don't know how much crypto I have. I'm not paying any taxes on that whatsoever. And then I'm also exploring a few other different type of options, which include setting up an irrevocable trust or some sort of business account where you can, treat cryptocurrencies like it's an inventory for a business, and you do sort of FIFO, LIFO type of transactions. And so they still haven't figured it out. This year is going to be really interesting. You're probably going to start to see, probably in February, March, April, the IRS coming out with more guidance on what they actually want you to do, because they're going to want to get their cut.
So my question has to do with cryptocurrencies via fiat currencies and the banking institutions that are, around the world, right, and the fiat currencies that exist. So kind of like the taxation issues. I guess, what do you see the role? You said that in the next 15 years, it's going to be 50% cryptocurrency adoption. So if that's the case, then what's the use of fiat currencies? I guess my question is, like, what do you see the future look like as far as people converting their cryptos into fiat currencies, or will there even be a need for that at that point?
Cryptocurrencies is a black hole. It's a black hole that is sucking in fiat currencies until it completely sucks all of them away.
I think that you've also seen with human evolution with regards to monetary policy, if Bitcoin becomes so valuable that people want to hold on to it, they're not going to want to spend it. And I think that's what you're going to see. They're going to want to spend the stuff that is less valuable or that's depreciating. Right now the US dollar with inflation is less valuable gets less valuable every single year. Your $100 in the 90s bought you a lot more groceries than it bought you today. And so you're going to see people slowly try to save cryptocurrencies because they're appreciating in value, and then spending their fiat currencies because they're inflated. Ultimately, until they get inflated to the point that they die. The average lifespan of fiat government printed money is about 27 years. Some sort of event will take place where it'll cause the fiat system that we currently have to stop, and then a new system to be adopted. And so whatever that event could be, it could be war, it could be some type of famine or disease or something, but something will take place and it will trigger people to switch to a different type of asset.
So we have two potential ICOs on the panel, right? So after you raise your $30 million, and hopefully you do that, what's your business case after that? How do you make money? How do you grow? How do you derive a bottom line?
Yeah, great question. So we are already a functioning business with thousands of paying clients and large enterprise clients. Ultimately, our mission is to intelligently protect the world's information. We think a piece of the way we can do that is to provide access to a unified platform. Kind of discussed it a bit. It's a monthly, it's a freemium model. Anybody can get on there and then the upsell is $10. So we have our model is to get as many people on the platform as possible. So think LifeLock, and then it's really cybersecurity. So that's our number one focus on that. We also, like I said, we have an enterprise offering that we currently sell to large enterprises too, but our focus is on the security for individuals.
So I think what you're really asking is, if you buy the token, is that going to appreciate in value, and how is that going to happen?
I'm not asking that. I'm thinking you guys are going to hold on to it, and maybe you're hoping for that, but how do you make money?
Well, how do we personally, me personally, make money?
Yeah.
Well, since it's not a company, like the actual platform, right? And Bitcoin isn't a company, right? You can't call this CEO and say, hey, CEO of Bitcoin. So it's not a company. So our solution to that, so it's a platform. So every platform needs a steward, okay? And it needs somebody to jumpstart it, right? So the steward, in the case, so if you look at Ethereum, they did this whole thing successfully. So they started out, they did a token sell. They got $20 million or something. They were the first one, right? One of the first big ones, probably the biggest one at that time. So anyway, they started out. They created a foundation and also a for-profit company. And so we're doing the same thing. So what we're doing is we have a foundation to steward the platform because it's an open source, worldwide platform. And then we have a for-profit company to feed money into that platform so that it can grow and there can be an actual platform that is useful.
Linux, right?
Exactly. So like Linux and Red Hat. So Red Hat. Yeah. So we'll have a foundation which is going to be the steward of the funds raised, but we're also going to seed a for-profit company that's going to bring money from industry. They're going to be bringing the money from industry into the platform. So you're asking like how are they going to make money? What's the product? What's the profit model for them and all that kind of thing? Well, it's literally prediction. So they'll be the service company that brings in and hooks up, puts the connector code between businesses and their requirement and the prediction platform. So the platform itself is we're aiming, and we think it has the potential to be the world's most accurate prediction platform, like the world's most accurate. And so if companies find value in that, which as an example, predicting prices, predicting the price of Bitcoin, so that in itself has value. If you can predict the price of Bitcoin better than anyone else, then you can control the price of Bitcoin.
So my question is for the long-term investors, hodlers. What's your favorite metric to look at to track fundamental growth over the long term? I've been trying to look at this from different ways, and it's been more difficult than I expected. There's a couple different ideas that have been out there. There's transaction volume to there's the Mayer multiple, even transaction fees I've heard, since it's basically a marketplace for transaction fees. I've heard people argue that because Bitcoin people are actually paying for higher transaction fees, that proves that it's more valuable on a fundamental basis. So I was wondering if you have any ideas.
Yeah, I told you a proprietary model that we use to measure risk, but how you obtain that information is the part I didn't tell you about, because that's kind of what we do. But I think looking at the user base versus the speculator base is a critical ratio. You look at number of transactions, right? I mean, what does number of transactions tell you? What does volume of transactions tell you? Well, it tells you people are using it, which is, or that it's being transacted. That's an important number. I mean, volume of transactions gives an indication of activity, and the volatility of that activity also tells you a little bit about when you see a spike in speculation or versus versus regular usage, right? So try and create these long averages, these 100-day averages of volume of transactions to give you a sense of what activity is really from users. But it's really hard to decipher it out. So what I do is I look at every cryptocurrency. I come up with a ratio as to what number of this cryptocurrency are actually users of the cryptocurrency, I mean they're using the technology to fulfill a need or a solution, versus speculators that are buying on speculation. That's my risk indicator. One of the best ways to confirm the risk indicator is when there is major negative news around a specific cryptocurrency, and to see the price moving on that. When Bitfinex was hacked for $60 million, right, and all the speculators sold, right, where did the price go? Well, it dropped about 20%. Okay, I know. 20% of the people that own that, were market speculators. They sold on fear. Who are the guys that hold it? The guys that hold it are the seasoned guys, the guys that use it, the guys that know that doesn't mean anything, right? And also the people that use it on a regular basis. So I think that's probably the best indicator. And how you gather that data is challenging, but how you confirm that data is the way I described with the price movement in the cryptocurrency. You can watch the price movement, and you can get a sense for who's using it versus speculating.
What we look at with our research is number one, and this is always number one, is people. People who have a proven track record of success when it comes to running a particular project. You could take a look at Vitalik Buterin and what he's done with the Ethereum network. And you can take a look at which projects he's associated with like Omise Go, as well as the Radon network. And you can look at the problems that he's solving with that. And you can say, okay, this is a particular project. I'm going to listen to what he says. I'm going to invest because I believe in him. You could also take a look at a number of other projects, and who are involved with them and what their role is in the space. I mean, a lot of the cryptocurrency space, people have been in this space for a while. It's still a very small community, so you can Google them, you can do LinkedIn research on them, and you can see, what it is, that they've done and what it is that they want to do. And ultimately, it's going to come down to the people and if they're gritty enough to get the project done. So always invest in people first.
I don't know. I didn't really have much to say other than, yeah.
So, in light of me, the one that has to stay here and clean up and everything, not staying here till 2, I would love for this to have started sooner. Therefore, we could have continued with the questions and such, because these guys are so smart, and I have truly been impressed. I've really enjoyed this event. But maybe if we could just take it down to 3 more questions. You guys good with that? Yeah. Okay. Does that sound good? All right. Great.
So I have a question that I wanted everybody to answer up here. Top 3 cryptos, because I know it gets asked to all of us every single day. So top 3 cryptos. So I'm going to cut Bitcoin out of this one. So I'm going to say Ethereum, EOS, and I'm starting to fall in love with Stellar. So
I would say that just for diversification standpoints, Ethereum, of course, because I think that everyone has to use them, when they want to try to get onto any other platform. So by default, you have to use Ethereum. I'm also a very big fan of Salt. For those who don't know what they are, it's the very first time you're actually going to be able to borrow against your cryptocurrency. And so the leadership behind that is by Eric Voorhees. He started Satoshi Dice. He also started Shapeshift. Everything he touches turns to gold, and he's now working on Salt. The next one would probably be the privacy coins like Monero. These are the type of things where as government regulation kind of comes in, and they start saying, hey, what are you doing? It's not that hard to just take your Bitcoin, go to Shapeshift, and get some Monero, and then all of a sudden you disappear. So
I gotta say, just as a caveat, I'm not in it for the money. If I was, I'd have $10 million today. So I gotta say that up front. So the currencies I like are, I do like the Monero. I like the privacy coins. That's something that's pretty cool. I like that. And I'm coming from a technological standpoint, so you can, and also a humanitarian standpoint as well. I really like CureCoin because I know the guys, CureCoin and Folding Coin, and the reason why is because you can mine their stuff and you're helping cure cancer. So you're helping protein folding when you do that, and you get your house heated and you make a little bit of money. So that all those three things are awesome to me. So I really love that. And I gotta say that I'm biased because I like the AI plus blockchain things. So this new one, SingularityNet, is gotta be my favorite because it has Gürtzel, what is it? Ben Gürtzel, which is a really awesome dude. I like him a lot. A deep thinker, and they took part of our project and made it, and they're making it happen, and we get it right on their coattails. So I'm really excited about that. So those are the three I like.
As long as it's going up or down, I don't really care what it is. I'll trade it.
Thank you. I've been to a lot of meetup groups. This is the best right here. It's amazing the talent that's in front of us. I don't know if I was supposed to pay. I didn't, but I paid a lot more for a lot less. I was hoping to hear Steemit be listed, but maybe you guys are missing out. I think that's amazing. I've got an organization I'm part of. We've got 3.4 million members, and we were wanting to just create, there's no technology behind it, just a little token for our community. I need some direction on that. We'd like to have that conversation offline. If someone could point me, anyone could point me in the right direction. And also, how do we get in touch with each one of you had an opportunity for ICO, education, trading? How do we get in touch with you on an individual basis? Is that information going to be provided?
Brian at AmericanBitcoinAcademy.com or Brian at RockwellFund.com. Just Google Brian Sewell, and you can land on our website. There's phone numbers. You can contact my staff. They'll get me to you, or send me an email. So Brian at RockwellFund.com or Brian at AmericanBitcoinAcademy.com. At the end of this quarter, we'll have Brian at ZionExchange.com, launching an exchange. And then we have a really cool treasure hunt coming out too. We're gonna do a Bitcoin treasure hunt, a global treasure hunt. We're gonna hide many millions of dollars worth of Bitcoin somewhere in the world and let people try and find it.
Wait, before you do that, I'm thinking we might want to add it onto the website just for like a week or something, so you guys can check out the B2C Utah website. So we'll go ahead and add that on there. I mean, if that's okay, Steve. Where'd Steve go? Okay, cool. So we'll add it on there for a backup, but we can all.
All right, Chad Bennett. It's just Chad, CHAD, at heroic.com, exactly how it sounds, HEROIC.com.
James, you can just contact me at blockchainlead.com. Has my contact information on there. You can also opt in, so that way you can receive information from us on what we're working on. So blockchainlead.com.
So we're at Nereal.net, and that's spelled Neureal. So it's new, like neuron real, .net. So if you go to the website, there's a link to Telegram to join our community. That's where we want everybody to go. That's where we'll keep everybody updated. So jump in there if you're interested, and then you can contact me directly at will with one L at Nereal.net.
I have a stack of cards for our main office line. You can also get a hold of me personally, and I can forward you to the right person. My email is bullsandbears.jason@gmail.com. bullsandbears.jason@gmail.com. If you want to approach me afterwards, I've got cards to our office, and they can send you in the right direction.
I want to again thank Steve for putting this together, and same thing for Michelle for organizing this event. I really appreciate the invite and providing food and getting everyone together into one space, because I've put on events and it's a lot of work. So thanks a lot for organizing this for everyone.